All right. Good morning, everybody. If you've been checking the news, it's all about France's government near collapse and Japan and the bonds. It's what you want to pay particular attention to this morning. We closed at 64.19. It's down here. So a move to the upside. We've got all this overhead 64.75, 6,500. And below we got 64, 63.50, 6,300. So whichever way we go, we're going to hit something. And the CTAs are still sitting where they were. So we double topped, or at least we went back to previous high, and so did their engagement. Same as like back here. No insight. China basically flat, Dow less than a quarter, and then the small caps. So that regime that we've been seeing where the small caps lead in the pre-market and then they give it all back, or at least stand aside for the larger cap into the day. That's not what we have this morning. So we're kind of getting away from that theme again. And that's usually the way it goes, right? When you get this dominant theme that lasts for a while, it doesn't usually just stop on a dime. We'll get fits and starts, and then finally it fades away. So we saw a little bit of that last week where it was kind of hit and miss on small caps dominating. S&P at a quarter, NASDAQ doing better than that, not quite at a half. Really don't have a lot on the table. Tomorrow, we're going to get those job revisions that has been kind of anticipated since May or so this year. So we've had this event coming for a while. They've had plenty of time to work their way into it. And then we've got the Apple event tomorrow, which a lot of analysts are saying, don't get your hopes up on them having anything really wow there, right? Supposed to kick off around 1 p.m. Eastern time if you're interested in following that event. We always do at my house, right? It's live on YouTube and on their website, so you can watch. But not really expecting that to benefit Apple stock all that much, especially with the notable lack of improvement in things like AI and Siri. The bigger issue is going to be the job revision numbers that come out tomorrow. So we got some auctions in the front end today. You could use the IRX, keep track of those front end auctions rather than, trying to put all the little pieces together. Otherwise, we're just waiting on headlines, waiting on something to finally break this market loose. I've lost track now of how many prime ministers this is for Japan after the guy that they've had for over a decade resigned. But it's getting to be a revolving door. I can't pronounce his name either, so I'm not even going to bother. All right, watch the clock. At 11, we're going to get some inflation expectations, but other than that, we could possibly get something out of the White House around 10 o'clock, quarter after 10. They're usually late, right? So with that one, just keep watching until we finally get something at whatever time it comes through. The call wall rolled up higher again, but the put wall rolled back a little bit. Not back as far as it was, but it did roll back. It didn't roll up with the calls. So now we're looking at 6608 for the call wall. The volatility trigger is just under the 10-day, which is also the 3-week. So a lot of structure at 6480. We tested it last night and came right off of it. I would expect to see that behavior again. Then the 20 period, which we tested on Friday, 0 gamma 6450, and the put wall 6400. So a 200-point range between 6408 and 6608, and the call and the put wall. And we've got 2 weeks to OPEX, right? This is the countdown. We've got the 12th, and then the 19th is OPEX. If you trade futures, this week will be the end of the week for the contract that you're trading, at least in the indexes, right? The ES, the NASDAQ, copper and gold and all those guys, they already rolled. So depending on the platform you use, you may have to manually roll, or it'll just be rolled for you and you'll come in Monday and you'll be on the new contract. You want to keep track of the volume and open interest if you're going to do it manually. And when the open interest in the volume is greater in the next contract out, it's time to go. And right now there's around a 50-point discrepancy from where we are versus where we're going. They're looking at another bullish quarter with December running 50 points higher than we are currently. Remember, these are futures, right? It always surprises me that people say, wait. This is a projection of where the market expects we are going to be in December. Why do you think you call them futures? The forward future price of the S&P or NASDAQ. Anyways, clock's ticking, right? We are range bound within our own Globex, resting on these pivot points. The red lines we see overhead are spot gamma levels that are not the 4 main ones. The volatility trigger, 0 gamma, call wall, put wall. They're combo lines, which just get a lot more complicated, but either way, they're options levels. they're just not as set in stone as volatility and zero gamma and call wall and put wall. So that's a reasonably decent 20-point range, 6480 to, let's call it 30-point range, 6480 to 6510. That's what we got to get out of GTFO, get out of the box. If we can get outside of our own Globex range, we can challenge yesterday's low, but we'd have to break through that 20-period daily moving average and then get through the zero gamma line, or challenge yesterday's high, and then we can take a run at that call wall. That would be our breakout metrics that we're focused on. When we're looking at this on the daily, you see the moving averages, they're still pointed up and to the right. They're still spread out. Price is still above all of the averages. And when we've come down and tested that 20, we did get back above it. This is drawings, right? So you can save a new drawing set and name it whatever you want. That drawing is called buy the dip. It's just a level, right? That I got to name it something. So distance from pivot, history, right? It's just naming some drawing set so that it can be saved by the dip. That's it. It's just the pullback. Don't let the name fool you. It has no bearing on pullbacks and buying the dip or anything like that. I just needed a title to name the drawing set. Until we get a definitive break of the 20, close below it, and then continue to drive lower, this regime isn't done. We have no topping pattern. We have no reversal pattern. We don't even have any solid weakness signals. We continue to drive with higher highs and higher lows. Now, don't get me wrong, the volatility is increasing and the average daily range is increasing. So volatility is higher. There's a lot of violence up here. The bars are really big. The moves are really violent, but we're still making higher highs and higher lows. So it's not a good, clean, beautiful trend, that's riding above the 10 and the 20 with gusto, but it's still going, and it ain't done yet. Right now, we're trapped inside of yesterday's really big bar. And yesterday's really big bar, or Friday, is an outside bar, right? It broke above Thursday's high and Thursday's low. So big outside bar, and we're inside of it. There's no joy on that one, right? There's no good setup or pattern or setting, nothing. And if we wanted to tighten everything up, we've got this structure to work with. Doesn't really help us out that much, but there, it's there. The mid on that is below the 20. And it's just a smaller version than the one that I was showing with this, right? Actually, it's the same one, isn't it? Yeah. So it's not really helpful because we haven't come down into that 64.50, which is basically the half that we're focused on. And we can tighten all of that up and look at the midpoint of yesterday. I mean, to a degree, that would help. And or we can do the latest run up, right? From that low up to that high. And that only adds a few points. We were looking at like 64.48 and we were rounding it to 64.50. And now it's 64.56 and we would round it down to 64.50. The difference is if we do it this way, it lands right on that 20-period moving average and gives us another reason to expect that 64.60 or whatever that level is going to hold if we even check it today. We'd have to go down there and hit it just to see if it's even going to hold. So we got nothing. We're stuck waiting on headlines with no reason to think that what we've got right now is going to change. The volume in the overnight was within average range, so nothing there either. All right, we are closer to the upper ADR this morning than we are to the lower ADR, and that implies we're just going to go on up there and hit it. Both of those ADRs are inside of yesterday's range. I'll bet the lower one pretty close to the previous day's low. Still, both of them are inside of Friday's level. So we've got this sort of flat top rising wedge shape here. It's not the best I've ever seen, but whatever. Previous TRB, that's already done. And now an inverse TRB looks like it wants to come back and check that 64.92. So you could tighten up the Globex range that we're working on, just focusing on the mid, see what we get out of it. But we still got to get out of the box. And if you want the box to be, those 13 points or all of the Globex, doesn't really matter. We still got to get out of the box. Rising wedges generally break to the downside, right? So if this is going to play the way that it normally plays, then 64.80 would be the target for that breakdown. All right, I started to talk about this a little bit last week, and this is a decent example. It's not exactly what I was looking for. It'd be better if we were a little further up. But this lower pivot point down here, 64.67, that's the weekly pivot point, and we're opening above it on Monday here. Now, it's not extreme. If we had opened, say that far, that would have been a bigger deal. We're a lot closer to it. So we could open here and we could continue to run to the upside. But if we ever come in on a Monday and we're a long ways away from that weekly pivot, you'd want to be concerned about how much more we could get on the week. Because, well, if we opened that far away on a Monday, how much farther are we going to go? This morning, we're only, 50 points away or so? It's not that bad. It's not enough. We could continue to drive farther away from that weekly pivot. But then there's also the daily pivot, which I pointed out Friday of how far away we were from the daily pivot and how you want to keep track of your S&R lines. It's one of the easiest ways to play an intraday mean reversion. So we did hit that pivot yesterday. We had a MDP Friday while the stream was on, right? Friday morning, we had not hit that pivot, and it was going to be the second missed daily pivot in a row, but that's done. We hit it. We closed underneath it. Today, the pivot is almost in line with yesterday. That's kind of neutral, not much to it. Price opened underneath it. That's bearish. And the channel is much narrower than Friday's channel. But it's still a wide channel, all things considered. And a wide channel implies that if we break out, it doesn't stick and that we come back in again. But we are talking about breaking out of all of this. So this narrow channel, or this channel that's narrower than Friday's, but it's still a wide channel. This channel implies that if we run all the way up and break out of that high, that it doesn't hold and we come back in. Or that if we run all the way down here and break out, that we come back in. Just getting to the edges would be a surprise at this point, right? We're not going anywhere. We need some fuel to get us moving. The S&R lines are derived based on math from the previous day's trading. It uses open, high, low, close, right? And then, between those four, you have to divide by 4. If you get rid of the open, then it's just high, low, close, divide by 3. This is just basic math stuff, right? When you do that math, you get these S&R lines, support and resistance. Well, how far apart those levels are depends on how much of a move we had the previous day. So Wednesday was a really narrow day. On Thursday, we didn't have much of a range between those S&Rs. Friday, we had a really big, expansive day. And now today, we've got really wide S&R lines. Base case scenario is we stay within these S&R lines today and we don't get beyond it. And that's if we can even get to them in the first place. They line up oftentimes really close to the ADRs. So whether you're using, the average daily range or the S&R lines, we've got structure above and below us. And at this point, it's hard to see that we're even going to test those edges, let alone get through them. And CPR stands for Central Pivot Range, right? This is a floor pivot. That channel with the yellow lines is the Central Pivot Range. It's just math, just pure math, right? You can go to Google and look for Central Pivot Range. It'll lay out the formula and you can type it out. On Friday, the point of control for last week was much lower down. It was down here in the 40s. And I had mentioned that it was not useful to have it way down there and that it would benefit us more in our analysis if it was up here by the end of the day at the end of the week. And sure enough, there it is. So now this level has strengthened even more from another week of trading. These 4 pivot points, these floor pivot point of controls, just create a massive zone. And in the bigger context, this is the range that we're dealing with in the broader market. 200-point range, top to bottom-ish, 63.50 to 65.50. We got to get out of this box for the broader market to do anything else. Otherwise, we're just gyrating right across the highs and checking the lows and then back again. It is worth noting we don't see a lot of defense like we did at this high with that structure. We had this high and no structure. And we talked about before when price runs up and then it falls back and we look at the point of control and we don't see a big volume cluster, that we didn't see a bunch of sellers step in and smack that across the high. Instead, we saw buyers fade out, no new buyers stepped in, and price faded away. It's 2 different points of view, right? It's analyzing how price reversed across a previous structural level. So looking at last week and that high, we didn't see a bunch of sellers come in and defend that level. We just saw buyers quit buying. 10-day, 30-minute volume profile and TPO. We're starting to get a clean distribution on the volume profile. It's been a long time since we've had one with a narrow value area. Point of control on the TPO and the volume profile lined up really nice. And through the week, this week, we are going to get to the heart of these candles that made the current range that we're in, this value area that we're dealing with. So each new bar on the right, we'll remove a bar from the left, and we'll start getting into these candles as the week goes by. And when we do, we got to start asking the question, where's the point of control going to go? Where's this structure going to move to? Kind of a tie at this point between coming down into that 6,400 or seeing it move up into 6,520. I'd really like to see it move up into this 6,520 with us above it, right? If we're not above it by the time it moves there, then it's going to be over our head as a resistance level that we're going to have to work through. We can see the footprint from back here, the 28th. And then more work was put in here last week. But we've got days before this point of control moves. So we still got to just give it time and let it play out. On Friday, we hit Thursday's VPOC, so we're done with that one. But on Friday, we built a new VPOC, so we'll just take the line and bring it over. Now, I'm not going to get this to the tick. I just don't care. I'm going to put it to the closest point, and that'll work for me. But you do you, right? If you want to zoom in on this thing and get it down to its absolute tick, put it right on the line, then yeah, you do that. So we still have 3 levels below us of these VPOCs. And now we've got a better chance to look at the reaction Friday. So of course we spent the most amount of time down here, and that's where the point of control is. That makes sense because we spent, like half a day down there. We didn't really spend a whole lot of time here, but we built it out really well. If we were looking for that selling component that I had mentioned, that's what it would look like. So those buyers ran into a bunch of sellers sitting up here. It's not a surprise. The fact that we didn't see them on the weekly is not much of a surprise either, because that volume profile from the weekly was looking at the whole week's worth of volume. And this just doesn't really compare to, the other 3 days, because last week was a short week, the other 3 days of volume. But looking at it by itself, just looking at Friday, we can see those sellers smacked it down across the 65.40 area into the open. And, Friday, when we were coming into that open, market breadth was really strong. And I called it short from the open, and then went and looked at all that breadth and was like, well, maybe I'm wrong, because the breadth was really strong. Advancing and declining, the ticks, the AD, UVol, DVol, everything out there was bullish. But the short was still there. Like there wasn't any way around it. Turns out I was just ahead of the market. It finally caught on and turned, and down it went. But it's what I've said before. Price action is awesome, but price action will lie to you. So you can't just use price or breadth. You just got to be able to understand what's going on in the market. That short was there at the bell Friday. It just took the market a few minutes to see it before it finally started to catch on. And now we've got a classic P-shape profile this morning. Narrow stem, tight distribution, point of control in the upper zone. We'll see how this weakness down here develops, if it holds or not. With it being that weak, I don't think it's going to hold if we go down and check it. We'll see. Otherwise, if you measure all of Friday, we are back above the half. But we're not expanding farther away from that half. We're holding like right there, right? And that's a big deal. If we break back below the half, I think it's game on for a short. But it's a short-term short, right? We're not looking for a broad market sell-off, just talking about maybe getting down to Friday's lows or checking some of last week's lows. And we've still got a lot of defense down here. So even if we do get down into this zone, every time we've gotten down there, buyers picked it right back up again. This box is what we drew last week on Friday. We were measuring the range between the red line and the green line. This is the weekly expected move. And on Friday, when we're looking at it, it's not set in stone. It moves through the whole day, and then it locks into place after the close on Friday. Well, it contracted even more, which is why our box is bigger now, because the range narrowed into the close. A narrow range on the week says the market's not expecting a lot of volatility this week, right? But that's a two-way street or a double-edged sword, however you want to look at it. If there's a big event this week, say non-farm payrolls, FOMC, CPI, some big event that the market is worried about, it will project a narrow range week because those big events are volatility suppressing, which is kind of counterintuitive. But the market says, yeah, there's a big event. We're probably going to go sideways into that event. And so they'll project a narrower range for the week. The trick is to spot why is it a narrow range. And that's usually pretty obvious. If it's CPI, PPI, NVIDIA's earnings, some big catalyst that we can see coming. But sometimes we don't know what it is, but the market does. We've all seen that happen, right? Wall Street knows, and they just won't tell anybody, and then retail is sitting out having no idea what's going on. It happens. But we've got a narrow range week. And of course, it's very likely tomorrow with those revised job numbers. So at least we know why it's narrow. And we don't have to wait until Thursday for it, right? At least it's on Tuesday, so it's relatively early in the week. We can get it done and do something else for the rest of the week. Which really says that for today, we're not expecting anything. Today should be sleepy, slow, boring, digesting what we saw on Friday, and really just trying to hold the line while we wait for tomorrow's data. That's the base case for today. No big economic schedule. So, I mean, any of that could break, right? News from France could send us moving, or from Japan. Either one of those two hot spots could certainly break us out and get us running. We're still above the 10-week and just easing our way back still. So on the higher time frames, we're just correcting through time nice and easy. We got ahead of ourselves for a while and we were far above the 10-week, right? More than 4, more than 5. And we've just been correcting after that big, massive run back up off of those lows, right? It was a heck of a recovery. And it takes time to digest that. Markets need to correct after some behavior like that. And that's what we've been doing, just correcting nice and easy. You can correct price by turning around and running back really fast. That would correct it. Or we can just sit sideways and give these moving averages time to heal and to digest that move. And that's what we've been doing here on the 10. Just easing our way back, getting that correction in without sell-offs. But we're almost done. It's been in the oven long enough, right? It's time to start poking sticks in it and seeing if it's done. Now on the 10-day, we're just hanging in this zone. Nice and easy. We're not overbought, even with that big move last week. We are not overbought. We're not overextended. We haven't moved too far, too fast, and it does not owe us any sort of mean reversion or pullback or anything. Nothing. We're just in a good, healthy spot, and we're back above the 10 again. We spent some time underneath it last week. We're back above. We're good. We can go 0.5% above or below, and we wouldn't have any risk threat at that point of a big market reaction of any kind. This is good, healthy, decent, nothing wrong here. So we got nothing. I set my mouse here on the 19th. Things look pretty equal between the yellow lines at the top and the bottom. And it says 52 versus 48, basically, right? Nice round numbers. But if we run it out to the end of the month and we look at those numbers, they're starting to slip more and more, right? It starts to kick one side off more than the other. Now it's at 53.47, more to the upside. And it probably is hard to see in there in the stream, but that's the bell curve. And there's more upside on that curve than there is downside on that curve. The Mag 7 down volume is down. That's a double negative. And really, I mean, looking at things that are down, that's it. And down volume being down is bullish, right? Looking at what's up this morning, the VIX, China, nat gas, uranium, precious metals, the Mag 7 up volume, China again, precious metals, China again, bots, energy. So we've got quantum moving early this morning. It's not enough yet, but quantum's up. Some Bitcoin is up way down here. We'd want to see stronger Bitcoin. The dominant ones is China, precious metals, and nat gas. You don't want a rally day on nat gas and bots. So we don't have the hyperscalers this morning. The Mag 7 complex. Airlines are down. It says IGM is down, but that's an algo print at this point, and you don't trust those. Yeah, it was from after hours on Friday, and that's the same if you look at like CLOU Cloud. That ETF will often read in the pre-market that it's up or it's down, but if you go in and look, it was actually after hours from the day before. So IGM is down from after hours Friday, not because of anything happening this morning. And it's still just a little algo print. It didn't even build out any volume here. So I wouldn't pay any attention to IGM being down. VDC, same thing. It's just a little print. It's not even putting any candle work in there. So on the things that are down, airlines, that's about it. And even that, not building anything out here. So we got nothing for what's up. Okay, that's putting in some work in the pre-market. Actually got some candles in there, nat gas, but it's not going anywhere. We had an inside day breakout. Now it's just stalled there. And you don't want a rally day based on nat gas. USO is also up almost 2%, but that didn't even get it outside of yesterday's range. Right? We had that really big down bar on Friday, and we're still inside it. Even if we get that breakout, we're under the year-to-date anchor to VWAP. So we got to get above that. And look at that VWAP's been running nice and flat. And we've been getting these lower highs and equal lows. That's actually an upside compression. That could break up. The crude up into 82.5. It might be worth looking at crude if we can retest 72, put on some at the money short put verticals, get half the width in credit. Start building in a legged in iron condor. And we got uranium. That would be the OKLO, the SMRs, those guys, ties to data centers. But it's been range bound. So, even if we get this breakout today, we're not expecting much out of it. Back into that 41.50, maybe 41.75. It's been a fight here. Big wicks on each side, neither one winning. But we did get this August 29th with new highs. Granted, we only wicked higher, but it's an inside day breakout. So we could try to check 42. That's a big mess. I'm gonna have to hit the textbooks on this one. When you get an outside bar on an outside bar, the next bar becomes really important. There's a pattern here. I can't remember what that's called, but it's an outside bar on an outside bar. But it's a monthly. So, I mean, it's not going to, I don't need the answer today. China's up today with the inside day breakout. But it's back up against this previous resistance from late August. And then to the downside, we've got March 18th of last year as a structural support level, like 18.5, excuse me, 38.5. I would say if you're long China, watch out. It's gonna hit its head really soon. That's Baba, Baidu, JD, PDD, XPEV, Neo, all those China ADRs. They're coming into a resistance. Gold miners still up. Another inside day breakout. Not really getting anywhere though. So yeah, it got the breakout, trying to recover from that sell-off Friday afternoon. And it's still holding at the moment, but that's not looking really strong. It's a gappy booger. Pot stocks don't want to rally on pot stocks. And then gold, silver, energy. Energy was in the news, right? They're talking about releasing more barrels onto the world market ahead of schedule, which you would think at first blush would make oil prices go down. But they said that the oil markets are still responding to the threat of tariffs against Russia and oil and the supply of oil from Russia. So it took the news and made the upside move. Still, the collar has been on for a while, right? You've got 85 to 90 is the government collar that's in place. If we get too cheap, they fill up the reserve. And if it gets too high, they use the reserve to flood the market and drop it back down again. So the collar continues. We got chips up in the pre-market, but not enough. So keep your eye on them. If we can get chips moving and the Mag 7 moving, they're both up in the pre-market. They're just not enough yet. So Apple, Amazon, Microsoft, Meta, Tesla, get those guys moving. Nvidia, we can get that breakout and get the S&P and the Nasdaq running to check yesterday's high. Otherwise, if they start to fade or they just don't put in any work, then it's likely we're going to hold the line. We don't have to sell off just because they're not working, but can't really expect to see a rally day if we don't have any fuel to get it to go. Every day we ask the question, what's going to move this market and get us to breakout? And it can be dollar, treasury, bonds, yields, 0-day options flow. Well, we don't have any headlines anticipated. That's the known unknown news for the day. We are waiting for a big event tomorrow, which gives us another reason to believe that we're just going to hold the line today. And we can't see 0-day flows in the pre-market. So even if we were getting some, we wouldn't know it yet. So as always, GTFO, get out of this box first, and we're already getting the trend line breakover. So check that low and then retest the Globex low. Get out of this box first, and then Friday's range is the next box. Get below the half back, which we just bounced on, for a chance to check the lows down here, 64.70 and then 64.50. If we get to the low of day today, to me, that's a reversal play back up. I'm not expecting that we sell off and go lower than the low. We can wick out, right? We can get like a 111 off of yesterday. I love that trade. And then back inside again. That's what I got for you guys. Be careful, be safe. I'll see y'all.